Let's get to our guest here. He says we are ready for a breakout. Fundstrats Tom Lee calling it today. He says the bottom is in for his epicenter stocks. Those include names like Best Buy, Cat, AMD, and Mosaic. Tom, of course, is a CNBC contributor, a Fast Money friend. He joins us right now. Tom, why do you think it's a bottom here for the epicenter?
I think four important things happened this week. The first is, and I think the most important, is the CDC lifted essentially all restrictions for fully vaccinated Americans. That not only speaks to how effective vaccines are, but I think it really hints to the policy lifting on the restrictions for cruise lines and things that have really been decimated during COVID. That's huge for epicenter. The second is India cases are rolling over, and that's really taking down the tail risk of a global shutdown. Third is the market had a failed attempt at a crash. The VIX didn't even manage to break 30 after rising 80% over 3 days, and it's now fallen almost 50%. So that's a big risk on signal. And then I think as an extra credit for those who follow DeMark, small caps, which we think is a really important proxy for the epicenter stocks because it's full of epicenter stocks, actually had a sequential 9 count on Wednesday. But on Thursday, it did exactly what we needed, which on a relative basis to the S&P, registered a 13 buy signal on the combo. So this happened to energy stocks on April 23rd. What happened 10 days later? Nearly a 20% rally. So I think there's a huge rally underway for small caps.
Hey, Tom, it's BK. So I'm curious, the one thing that I'm looking at next week, obviously, is oil prices. You just mentioned energy. Do higher oil prices help or hurt your small cap call?
I think it's helping. I think what people have to do is adjust inflation for gasoline prices. For instance, even if gasoline hits $3 and someone says it's a 10-year high, you have to remember on a nominal income basis, that's actually the equivalent of like $2.50 gasoline 10 years ago. So gasoline and energy and oil really have to push up towards that above 80 level, which is the Goldman target, before we start to say it's crowding out spending the way it did the last time it was at 80. So I think there's a lot of upside room, and I think it's a reflationary signal.
Tom, when you look at your epicenter stocks, what do you think about the rest of the world, though? Broaden this out. I know where you stand, you know where I stand, but what do you feel about Europe, about the recovery there? Because I'm seeing a lot of different funds saying the real money to be made in the next 6 months to a year is going to be in those economies ratcheting back up and reopening because they've lagged behind us.
Yeah, I mean, I wouldn't disagree with that. Because let's think about the story arc. If the story arc is commodity prices are up, nearly 40% of the world are commodity producing countries because they export. Those are going to be booming economies and booming equity markets. As you point out, Europe is reopening, and there's a lot of countries tied to European trade improving, and those are going to be great equities. But the one thing I would hesitate to say is, I think we want our clients to own the best companies. And besides U.S. large cap, a lot of U.S. small caps actually dominate their markets, and a lot of Mexican companies in Mexico are bluer chip than the S&P. I don't know if you find a lot of blue chips outside of the U.S.
All right, Tom, we're going to leave it there. Always great to get your insights. Tom
Thanks
Lee
for having me.
Of Fundstrat. We had a couple of screens that shows Tom's epicenter stocks, names like Best Buy, Monster, Borg Warner, Timken. Pulte was an interesting one. Delano, I'm wondering, which stocks do you like in terms of epicenter?
You know, Melissa, I'm really looking at, Target as one of the stocks that I like here. And I think the biggest thing for Target was they really outperformed competitors on a share price basis over the time of the pandemic, right? And the biggest thing now is as we reopen, what happens with to the companies that really performed well. Target and the companies that were essential companies during that time. Target also had a strong e-commerce strategy, and that bode well for Target. And now when we look forward, Target also has strong essentials, strong e-commerce, but the reopening is a strong play for them going forward. So Target is one that I really, really like at this time.
Grasso, you came in with the international angle. Is that what you're looking at next? I hear that from a lot of people. They're behind us in terms of the reopening, and so maybe that's the next place for value.
Yeah. For me, I'm in a stock called Trinseo, TSE, and that one has a higher leverage to the global economy or to Europe versus the U.S. So look for stocks if you want to buy an ETF that's levered to Europe reopenings. That's great, but look for your names that have an outsized leverage to Europe. So maybe 60% Europe, 40% here, or thereabouts. But you shouldn't look for just domestic names like the home builders because there's too much headwinds for them.
BK, what I noticed in today's session was a lot of the commodities that had hit record highs coming off, and I'm wondering if we're at a point where we're seeing elasticity. In other words, the pricing's getting high and people don't want to pay it, so the prices come back down. I mean, have we reached that sort of natural point?
I think in some commodities we probably have. I mean, if you look at something like lumber, and this is why Pulte will be kind of interesting, you know, there is plenty of wood around. The bottleneck is at the sawmill. So prices have come up enough. You can start hiring people. There's demand there. So I wouldn't be surprised to see those things, you know, something like lumber start to come down, which again would be a really good thing for a Pulte Homes. Their input costs would go down. We already know they still have unbelievable demand. You know, of Tom's epicenter stocks, that's the one that I'm going to be watching.
Shepard Smith here. Thanks for watching CNBC on YouTube.